Hello everyone. Today I'll be discussing with you Nasdaq, right? So looking at Nasdaq on a daily time frame, right? So we're just gonna focus on a daily time frame for now, right? So on a daily time frame, the one thing that we have seen occurring is that the market broke above this recently formed high on a daily time frame, broke above this high, tapping into this area that consists of large levels of liquidity pool, right? So after we had that push to the upside, we have had an aggressive push to the downside where we saw an engulfing candlestick that actually engulfed 4 candlesticks, 4 bullish candlesticks. And then after that, we saw the market retracing, pushing price back to the initial area where the market started forming a retracement, right? So this area right now confluences with the retest of the daily demand zone, so daily supply zone. So we're currently trading within the daily supply zone. So what I'll be looking at is that I'll be looking for potential bearish reversal candlestick patterns to push the price of Nasdaq a bit further to the downside. So for me right now, I'm viewing this retracement as banks taking profit from their initial investment. So this area here. So these two areas, I will regard them as the banks placing their short positions, basically just to minimize, just to reduce the slippage. We know that banks, they actually do something called position sizing. So right now they place a short position, pushing price to the downside. When the price was going a bit further to the downside, we saw a lot of retail traders coming into the market and then trying to take short positions, which then led to institutional players or bank traders taking profit from their initial investment, pushing the price back again to where it originally started. So this is the area I'm currently looking at, right? So we know that this has been a problem. A breakout above led to a reaction, therefore getting more retail traders interested in taking short positions, whereby they provided a solution and then now they're taking profit from their initial investment. So we're still within the solution phase. We can expect price to decline in value, but we'll just keep an eye on it, as today is like the last week of the last day of the week, right? So remember that we're still trading within the daily supply zone, right? So we're still trading within the daily supply zone, but always know that like every time when you see a supply zone on a higher time frame, there are supply zones that can be formed, or zones that can be formed within that area, right? So now let's look at how long the market has been away from this area. The market has been away from this area for roughly 8 days. So based on the 4-hour time frame, we no longer consider the 4-hour supply zone to be strong or to be valid. So right now we'll be taking the rejection if it occurs, we'll be viewing it in terms of the daily supply zone. So the daily supply zone is the supply zones that's going to provide us with a bit of rejections, right? So right now, again, what we can see is that the push to the upside actually occurred due to the market breaking above the recently formed high. So we had a high that formed, and then the market broke above that recently formed high, pushing price to the upside, right? So now we can actually view this area as what? This area here, we can view it as a problem. A push to the upside, it's a what? It's a reaction. So we have that reaction. So now we're just waiting for a solution, right? So we're waiting for a solution.